All right, guys, it is the first trigger points of 2022. We have the new and improved Jet Team 3, our long term and out of state correspondent lender, loan officer, and loan officer assistant extraordinaire, live with us to discuss how to get your 30-year loans done in a timely manner. That way that you will be on your way to financial freedom. Hopefully they don't make me use my trusty punching bag today.
Hey, I've made you use that a few times this week.
All right, guys, it's 2022. We're going to talk about what we want to accomplish this year, how we're going to accomplish it, and who we're going to help. Okay, Eric, I'm going to let you take the lead. What you got? What you got going on, man? What you got going on? Tell everybody a little bit about yourself.
All right, so I've been in the mortgage industry for about 13 years. I have 4 years of housing counseling. I worked with HUD and HPF back in when the whole 2008 stuff started happening with mortgages. And I have about 8 years in servicing and been happily working here for the last 4 months asset-based lending, learning a lot.
All right, all right. So Eric has taken over essentially our whole 30-year correspondent loans. And since he has taken over, we have gone, and I'm going to put a little bit of your business out there. We have strategically gone from three on the pipeline, three 30-year loans on the pipeline, to currently having 19, and have closed in the last couple of months. What? How many we closed? About
Um,
total?
Altogether, about la- I think the month of December was what, 5 or 4. We did have a portfolio that we closed,
Yeah.
and then
But that
maybe
portfolio had how many properties in it?
it had 6 properties in the
Six
portfolio.
properties. So we closed essentially 10 of them in December. And then the month before that, we've just been rolling these things out, rolling them out. Um, the main thing that we're wanting to accomplish in 2022, and Eric, I know I've discussed this with you, is to be closing 10 a month
Yep.
or more of these correspondence loans. And the only way to do that is for you guys to be the forefront and talk about what we can and can't do, and basically educating people as much as we can on our 30-year correspondent lending. So Nikita,
Yes, sir.
you've been with us for a month, and tell everybody a little bit about you and what you've learned so far.
So originally I came from the fitness industry. I've been in the fitness industry for about 7 years. With 1 year, I was in residential owner occupied lending. So I have a little bit of a background in that. And then I came over here and I got with Jet Lending 5 weeks ago. And I've learned a lot about investment properties and how you can make money off of them. And it's been a breeze working with you guys. It's been fun. I think y'all are my little dysfunctional family. So
Some more than others.
So, hey, look, I really feel a lot of aggression coming my way right now. All right,
put it out on your punching bag
hey, I have it right here. Okay,
Oh wow.
yeah,
in hand.
anyway. So, Eric, I wanted to start this year off with a bang and let everybody know, where rates are, how to get qualified, how quick you can close, and the benefits of using us. So, I'm just going to turn it over to you, and you tell me exactly how we get one of these suckers closed.
All right. So as far as getting a long-term loan close, our minimum credit requirements are 620. Um,
Six
Anywhere
twenty.
620. So 620 will get us at least to 60% loan to value, depending on the property.
Wow.
The higher the credit score goes, the more that we can do. I know a lot of lenders out there don't do 80% loan to value on refinances, but we can. We can do 85% loan to value on purchases as well. Um, let's see what else. What else?
Let's say, all right. Let's say I've got a 720 credit score,
Mhm.
DSCR. Let's say I got about a 1.2 DSCR. Um, tell me what my interest rate would be on that.
As long as your the rent that you're collecting on the property is over market rent, and you're not under market rent, you're looking at probably like a 4.9, 5.1, with options to buy it down to anywhere between 3.7 and 3.5.
Talk about options to buy down real quick.
Okay, so options to buy down, you'll initially start off with the with your base rate, right? And then depending on the type of loan that you have, you'll have different options to buy that rate down. So say you start off at 4.99, and you have an option to buy it down to 3.750. There'll be certain points that'll be charged. Every loan is going to be a little bit different on how much they charge per for that interest rate, but it will be a one-time charge at closing.
Hmm.
And then once we analyze everything, and we determine that you do want to buy the rate down, we'll give you a breakdown of what your payment will look like, principal, taxes, and insurance, how much your DSCR will look like buying it down, and then how long it will take you to recoup that money after you've bought that interest rate down. Because a lot of people will say, I'm going from paying 1,200 or 1,500 at closing, but if I buy it down, I'm having to pay 6,000. Well, we'll give you an analysis on how long it's going to take for you to recoup that money. Sometimes it may be 2 years, sometimes it may be 1 year, depending on how much money and how much profit you have coming in out of your rental.
All right. So we got a couple of questions for you. Alex has popped in. Can Eric do short term and long term out of state of Texas?
We can do short term, long term loans nationwide.
Nationwide. What about Nevada?
We're working on Nevada.
Okay,
We're
we're
working
working
on
on
getting
Nevada.
on Nevada. However, we still can do Nevada.
Okay, we still can do Nevada.
Yes.
All right, because I've been getting that question a lot, and I know you have as well.
Yeah, I mean, we're working on being the direct lender there, but we can still get you funded in Nevada.
Okay.
It'd just be a little trickier.
What
Okay.
makes Nevada so tricky?
You have to be licensed in that specific state.
Mm.
Okay. Let me ask another question. Can you do 30-year loans anywhere in the United States? What states can you not cover?
I didn't come prepared for that one.
You didn't come prepared for that one. You knew I was going to ask some
But
tough ones today.
but give me a second, and I'll tell you right now.
Okay. Okay.
What about, can we do U.S. territories like
Um,
Puerto Rico?
so far, no. Puerto Rico, not at the moment. So the states that we can't lend right now on is Alaska, Minnesota, North Dakota, South Dakota, and Vermont.
Okay.
Any other state is open as long as it's not a rural area.
Okay. Just describe to me, because I know I've been doing this a while. Describe to me, in your opinion, what do you consider rural, or what would they consider rural?
So anything with population under norm, I think most lenders look at it under 9,000.
Hmm.
Some of them 15,000, and then we have a few lines that look at it under 20,000. But most of them, as long as it's 15,000 population and up, or you're close, within 30 minutes of a major city or major college, because like here in Houston, a lot of people don't live in the city; they live on the outskirts.
Hmm.
You know, we'll be able to fund those.
Okay. All right. So, tell me what's the most difficult thing that you're facing right now with getting deals closed.
Right now, the biggest challenge that we have is appraisals here in Texas. They're so backed up. Some appraisals are taking 3 to 4 weeks. Some are taking a little bit longer. Some don't even want to take the appraisal because they're so busy.
Mm-hmm.
But in those cases, we can still try to hurry up the appraisal and get exceptions, so that way we can get that deal closed sooner.
Okay. What's the fastest you can close them?
Um, the fastest that we can close, if we can get an appraisal right away and done, say we get an exception, we get documents, within a week, 2 weeks, 2 weeks max.
Here it's Chelsea. I'm returning your call.
Okay. Okay. Um, just curious. What is where do you see the hold on, whoa, hold on. We got a question from Alberto. Let's see here. With the appraisal, is the long lead time in getting it scheduled or getting it back after it's done?
Both. So it depends on the type of appraisal that is being ordered, or depending on the property, depending on the location. But for the most part, getting it scheduled is one. I think the ones that I've seen right now, I did get someone a schedule for 2 weeks from now, but then the rest of them are coming back as in middle of February, that the earliest that they can get out there and seen. And normally it'll take about a week. Um, if the appraiser's good, we might get that appraisal back within 2 days after they've completed the inspection. But if they're backed up, it might take a week, week and a half to get it back.
And just so everybody knows, here at Jet Lending, we have a pool of appraisals that we use for our hard money side. With 30-year loans, there has to be a arm's length transaction between the lender and the actual appraisal. So you have to go through what we call an appraisal management service, correct?
Yes, sir.
So that way it's underwritten with
There's
a
not a there's no interference with that appraiser giving us a favorable value back.
yes. Now
You
we
know,
don't do that. We do the exact same thing with the
yeah.
hard money. We want to, we don't go out there and coerce them or anything like that. But we don't have to follow so many regulations that a long-term lender does, even if it's non-QM. This money's coming from Wall Street, and they set the regulations to how they want this money lent out or deployed, should we say? So they come up with these rules to say, okay, hey, look, we're going to lend this money to you if these properties qualify, but we want true values. We want a reach between the appraisal and yourself. So you have to use an AMC, and then it has to go through their underwriter to ensure that it meets their value. So that's why the difference between hard money can close faster, because I can pick up the phone and call one of my 5 appraisers that I use on a regular basis and say, boom, hey, get this to me next week, because they strictly, literally, they're waiting on us to call them.
Yeah, and then also the lines that we use, or the capital partners that we use for our funding, they don't just have one AMC company that they use. They normally have 5 or 6 different companies that they'll send the request out there to, and depending on who's going to give them the closest timeline, that's who they'll normally go with. But a lot of times, if the timeline's just way out of the scope of what we need, we'll be able to request exceptions and move forward with someone that we've worked with closely at Jet, so that way we can get that loan closed a lot faster.
Yeah. Let me ask Nikita a couple of questions. Nikita, what have you learned about 30-year loans in the last week?
Well, we can do them in all states. Not Puerto Rico or U.S. territories. Eric is the master of 30-year loans, and
Not yet.
we can't do them in rural areas, anything less than a population of 15,000. There's a lot that I learned, but I would have to look over my notes. So I'm still learning a lot.
That's good. That's good. And it's okay. Hey, look, it's okay not to know everything right now. But what I want each of y'all to know is that every day that you do this is try to learn something new. That way you can take it to our clients and put it out there and educate our clients on how we can do better for them. Because at the end of the day, that's our main mission, is to ensure that our clients are taken care of and that they have a place to come and have one-stop shop, and that that way they don't even have to go shop anywhere else. And why would they when they get to work with such an awesome team? Eric is taking care of clients. Haven't had any negative reviews at all, so that's a good thing. And Nikita's joining your team, so that's going to be awesome for you. To that way you can deploy and get more. We can market you and get more content out there and get more people coming in here and doing 30-year non-QM loans or flips out of state. Hey guys, we can do. Hey, let's not just talk about 30-year. Let's talk about flips. We can do flips outside the state of
Outside
Texas
of
now,
Texas
right?
too. Yes, sir. We can
Let's
do
talk about that.
90% loan to
Yeah,
value.
yeah. Let's talk about that a little bit. It is a little bit different on how we lend, because it's not just it's not what I'd say jet lending underwriting it at that point in time. So talk a little bit about how that works, and we'll do a comparison.
Yeah, so I think with some of the capital partners that we have, once that appraisal is received, they can close in as little as 3 days for the short-term loans. But anything outside of Texas, you're looking at rates between, I think it's 6.99 to 13%. So it all varies depending on your experience. And a lot of the capital partners that we have when it comes to these fix and flips, that's what they look at. They're looking at how many loans that do you have under your belt, how many properties do you have under your belt, and how successful have you been in the past as well. Um, Terms are normally, you can do 6 months, you can do 12 months, 18, 24 months. Um, Documents requirements are pretty much the same as if you were to do a 30-year mortgage. The only difference is you're adding scope of work, so that way the underwriters contractors or our appraisers contractors can review that scope of work and compare it, making sure that everything's in line as well.
Okay. Okay. Same thing, pretty much same states.
Same states that we work with, same credit score is 620 to get started. And then loan to value, like I said, was 90% loan to value, loan to cost, and 100% rehab.
Okay. Let's see here. Got a question. Do you run comps and analyze properties in the same way for out-of-state properties like you do for Texas, Houston? No, we do not. We do not do any analyzing because we don't have access to their MLSs. So it's a little different when it comes to that, Alberto, because of the restrictions and access to those MLSs. Basically, and I think I know where he's going with this question.
Mm-hmm.
If you are going to look into different markets that to possibly invest in, the best thing you can do is find a real estate agent to
Yes.
run some comprehensive analysis for you to see what sales are going for. That way you can have a good picture of what your after repair value would be. Or if you're buying these properties for 30-year loans, what your as is value would be. Now let's talk the difference between a straight up refi and a purchase, because I don't want anybody to be confused here. So if let's say I've got a property that I did a jet loan with, and I've got 750 credit score, everything works out as far as DSCR, I can go up to what?
With what'd you say what the score was for purchase?
750 credit score or higher.
For purchase, you can go up to 80% loan to value. Anything over 760, close to the 800s, you can get 85% loan to value if you have at least 3 flips that you've done in the last 3 years, or and I'm sorry, and at least manage or still own two rentals.
Okay, I was talking about refis.
Oh, I'm sorry.
Yeah, I switched
Um,
gears on you. I'm sorry.
yeah, kind of confused me there a little bit. Okay, so for refinance, if you have a 740, um, you can get, hold on, depending on the market. I will tell you that depending on the market, because some markets are they're capped, like in Michigan and Illinois and Chicago, I think they're capped at a certain percentage. I think that one's 75%.
Uh-huh.
But for the most part, if you're doing a refinance and you have a 740, I will tell you right now, you would be able to get up to 75%. If your
Okay.
credit is at 760 and above, then we can do 80% loan to value, which a lot of lenders don't do.
Okay. So let's say I had a loan with Jet Lending and I want to do a long term loan, do a refi. We can go up to 80% of the as is value. We have
80% of the value once we get it appraised.
okay. Okay. And let's say, for instance, I come to you and say, I've got a perfect property, doesn't need any repairs. It's got a renter in place. I am buying it. It is ready to go. 760 credit score. What loan to value can I go up to? Is it a loan to cost or what is it?
It's loan to value at that point. And it depends, right? If the value comes back at a lower amount, then we would be going loan to, we would still be going loan to value and not, and your loan to cost would be reduced. At that point, we would kind of have conversations and talk about, hey, the value or the price that you're purchasing the property doesn't line up with the value. Either you're going to be coming out of pocket a little bit more to make up that difference, or you can go back to the seller at that point and kind of negotiate or try to meet in the middle to get that to lower your out of pocket money.
Okay. Okay. Understood. So it's not so on an initial purchase, it's not 80% of purchase price.
It's 80% of purchase price if the value comes in lower. I'm sorry, if the value comes in higher than the purchase price. So with a purchase, they're going to go off of the lowest of the two, out of the value or the cost.
Okay. So let's say I'm buying it for 150 and it appraises for 160. They're going off 80% of 150.
150, which is your purchase price, correct?
Okay, but on the flip side of that, if
Mhm.
it appraises for 140 and my purchase price 150, they're going 80% of 140.
Correct. We'll be going 80% at 140, and at that point, if you want to come up with the extra 10,000 out of pocket, then by all means, we'll move forward with the deal. However, if you want to go back and negotiate that contract, then that's still your option to go back and negotiate that.
Well, and if you write your contracts the right way, it's contingent upon appraisal,
Correct.
and the appraised value came back lesser than 140. My financing doesn't cover it. I'm either backing out or you lower this to 140
Exactly.
because the property did not appraise for that value. Depending on how you write your contracts up front,
Mhm.
giving you an out if financing does not come into or does not qualify the property. Nikita, what are you laughing about? Were you having a good time over there? Can't hear you.
You're on mute.
Sorry, I muted it because the printer was going off a second ago. Yeah, I have people that are messaging me about the channel. So
Oh, okay. What are they saying?
they just took a screenshot of it and they said small world, I guess, LOL, and an old friend sent me this. So shout out to Ryan Stanford.
Okay. They're watching you on the stream right now?
Yeah.
Oh, that's cool. That's cool. You got you're becoming famous, organically famous. Well, all right. So let's talk about our goals, guys. Let's talk about what we want to accomplish in 2022 as far as our 30-year in correspondent lending. Eric, I'm gonna let you go first because I'm really excited to hear what you got planned for Jet Team 3.
Well, talking with the different underwriters and the different lines that we have, they've been doing it for years. They've been doing it for 5, 7 years, and of course you as well, right? And that's the level that, and I'm sure Nikita's the same way. That's the level that we want to get to. I think my second month, one of the guys that I spoke with, he said he had just closed his record high of 80 loans in that month. And eventually, I mean, hey, it's not as easy as it sounds, but it's doable.
It's
You know,
very doable. It's
four
very
loans per
doable,
day.
especially the more people that we know about and the more people that we talk about 30-year loans, the more that they're going to be like, well, you can get down in the fours on a non-QM. That means low doc loans. If anybody doesn't know what a non-QM loan is, we'll go over that in a minute. But we're talking about low doc, hassle-free loans. They're not asking you for all these underwriting things that a Freddie and Fannie Mae loan would ask for.
Yeah, so for the loans that we carry, we don't look at debt to income ratios, we don't look at tax returns or pay stubs. We're looking at the assets. We're looking at your credit to make sure that we're giving you the rates. However, our main goal is looking at how much the asset is going to be worth, how much money you're going to be making out of that asset. Is it going to be profitable for you, or are you going to be losing money?
Yeah, yeah. And now we do some analyzing as far as on that scale, but typically, if it's outside the state of Texas, you're going to want to know. You're going to want to know what your values are. And as I said earlier, if it's an outside the state of Texas, we can kind of match it and say, well, yeah, I don't know if it's going to make that 150 as is value based upon what the comps are showing us, and the condition the property's in. I will tell you the Burr method is probably the best thing that is out there that everybody is talking about, and that's where jet lending fits in perfect. You buy it, you rehab it with jet lending, you refinance it with jet lending, you rent it out, and then you repeat. And us having this 30-year product in place is a perfect example of rents and repeat with the same lender. You don't have to go anywhere. All you have to do is say, Rob, we're a week out from having this thing ready to rent. I'm ready to start the 30-year process. Let's get it going. So guys, what is so funny?
Alex just left a comment saying Brian J. Burr and his calves.
Oh, we talking about Brian Burr's calves again? Oh Lord,
Brian Burr.
Y'all
He
don't
does
know
have nice calves.
he has the best calves in the real estate business.
Oh wow.
I'm telling you, he takes. Hey, you know what? Those calves, they're in great shape. They are.
Brian, we need your calf workout.
Yeah, we need to know if you're out there, Brian, and you're listening. I want to know I want to know what you're taking for your calves. I do. I really do, because I mean, I saw them things last night. And hey, guys, if y'all didn't know, Brian Burr does not wear pants. He wears shorts everywhere he goes. Everywhere. If he's ever in pants, then that means something went wrong that day, or something went really right. But anyways, all kidding aside, we love Brian. He's always fun to be around. So I don't see any comments from Brian, but I guess Alex does. Do y'all see any somewhere?
No,
Okay.
not that I can see.
But Brian Burr does have some awesome calves. I mean, they're amazing. Anyways, long story short. So Eric, you want to be up to closing what? 10, 15, 20, 30 loans a month, huh?
Yeah, at least get to like I said, they're in our goals, right? At least start off with having one loan closed per day. That will
Per
give me
day.
a minimum of 20 per month, and then from there start building it up.
Okay. And are you available? What times a day are you available?
24/7.
24/7. So you've got that hunger mentality. Somebody calls you on the weekend and needs you to analyze a deal for them. You're ready to go.
Yeah, send me an email, call, text,
Okay.
however you can, send smoke signals, pigeons,
Since
Pony Express.
you know what, I heard Pony Express is a very good way of sending signals.
What's the turnaround time on that?
Just depends.
The smoke signals.
Depends on the pony.
Honestly, I think the turnaround time is within 24 to 48 hours. If it dissipates, then you understand that it's a done deal. Well, guys, I want y'all to get there. I want y'all to be able to grow your team. I want y'all to kill it in 2022. I want us to be sitting here in January of 2023 saying, "Hey, we surpassed our goal and we're closing, 2 a day."
Yep.
That way we can have this thing skyrocket into a whole new venture. Again, guys, Jet Lending's your one-stop shop for out of state, in-state, 30-year correspondent loans. With this element, we can close anywhere we want to now.
Yep.
Anywhere we want to. Eric, anything else you want to share?
No, we just look forward to everyone reaching out and adding more loans to the pipeline, helping everyone grow their portfolio.
Yeah. Okay. Nikita, anything else?
Same as what Eric said, and I hope everyone reaches their goals this year and achieves more, and everyone has a good new year.
Yeah, you know a lot about people setting goals, and
I do.
that's one thing that I like about you is because you have to deal with it all in the fitness industry. You've had to deal with that throughout your whole career, like people setting a goal and holding people's feet to the fire.
Yep.
In the fitness industry. Well, I'm going to challenge you to do this.
Okay.
I'm going to challenge you to hold even me, accountable for growing this 30-year correspondent element that we have, our Jet 30, as we're calling it, or Jet Correspondent. We need to come up with a catchy name. I like Jet 30, but we need to come up with a play on word for our Jet program. I know we call it the Jet 30 year, but we need to come up with something a little bit more catchy. Maybe we call it the Jet Burr effect. Brian Burr would like that. The Jet Burr effect.
Alex said the Burr method.
The Burr method, yeah, the Burr. But I want Nikita. I want you to hold the team accountable for us trying to grow this even further than what we've said. And each month we need to have a check and say, "Hey, we said last month we were going to do this and we didn't do this. Why haven't we accomplished that?" And if we all three of us hold each other accountable and keep marketing and keep putting this content out there, I think that we're going to get the word out there. We've got. I challenge each of y'all, Nikita. We've talked about TikTok. There's a lot of marketing going on TikTok for real estate. I'm telling you, that platform is blowing up. It is blowing up, and it's easy to get people involved that way. Little 30-second clips of what we can do, and I think that's going to benefit us to be on all platforms and getting people involved. That way we can get our content out there. Guys, we're going to cut it short this week. There's not a whole much more there's not a whole lot more we can really talk about except that we're ready to close your 30-year transactions. We're ready to close your hard money transactions. but most importantly, that we want to grow this Jet Team 3 into a monster and closing, 20 to 30 loans a month. That way, everybody's got to get to know us, and we got to get in front of people all the time. So, Eric, I challenge you to do some StreamYards with some of your clients.
Mhm.
And do some YouTube videos on their satisfaction of your performance. And Nikita, I'm going to challenge you to hold us all accountable on keeping this team moving forward. Okay.
All right, we'll start vision boards next week.
Vision board.
What?
Ooh. I don't know about a vision board. I'm not an artist. I'm not an artist.
I'm
Eric,
going to hold you accountable to the vision board. You have to do it.
Okay.
Can we
I have
snippet
to do it.
pictures from Google?
Yeah. Can we snip it and just put it over here? Can I cut and paste? Anyways, guys, that's all the time we have this week for Trigger Points. I want to thank Eric for taking time out. I know you hadn't been feeling the best, but I appreciate it. And Nikita, always thank you so much. Hey, y'all can reach Eric. How can they reach you?
You can reach me at 8. You can either call me or text me at 832-415-1820, or you can email me at Eric with a CK at jetlending.com.
That's ERICK@jetlending.com. Or they can email you at jetteam3@jetlending.com.
That one too.
And it will go to Nikita, myself, Eric, and we will get you a response ASAP. Nikita, how can they reach you?
You can reach me on text or call at 832-916-2588, or you can email me at Nikita, NAKITA at jetlending.com.
And again, at jetteam3@jetlending.com as well. All right, guys, y'all have a great weekend. Let's start next week by closing by getting at least 5 to 6 appraisals ordered. Okay.
Good
Sounds
deal.
good.
All right, guys. We'll talk to y'all soon. Out here.
Have a good one.
Bye.
Bye.